This is a real loan estimate for a $530,000 home right here in Pasadena, Maryland. The down payment was $106,000, but the check these buyers actually had to write, $126,959. Now, a few days ago, I gave you my 4 closing cost buckets that your money would be put in to get to an actual closing table, and I gave you the rule of thumb, which was 2.5% to 3.5% of the home cost for closing costs alone. Today, we're going to see how those numbers stacked up against a real estimate from an actual lender, because one of those numbers came in at double my estimate. I'll show you why. Plus the 2 tax lines that are worth almost $6,000 that surprise every Maryland buyer. Also in the description, you can check out my closing cost calculator, which will give you a rough estimate of what you might end up paying on a loan, and that differentiates from county to county and depending on what kind of loan you are getting, an FHA, a VA, a conventional. Every loan, every situation, every house is going to be a little bit different, so do not rely on these numbers as hard facts. They are ballpark estimates to give you some education about what you might be looking at if you want to buy in Maryland. That being said, let's jump in. Claire, Maryland real estate lady here. Today, I want to go through line by line a loan estimate prepared by Brittany Bobbs with Cross Country Mortgages. Her info will be in the description. All right, let's jump in. So here's our headline. You can see the purchase price is $530,000 on a conventional loan, a 30-year fixed mortgage, 6.375%, 20% down, $106,000. Look at this line. The cash from the borrower is $126,959.48. This is almost $21,000 more than the down payment. So if you've been saving with only one down payment in mind, that will be the gap that typically catches people or backs them off or makes them shocked. And I want to make sure that you are not shocked by that. So where did the $21,000 go? Okay, so a quick refresher, if you missed my closing costs video, I will put a link to that in the description so you can check it out. But there are 4 major buckets that your closing costs are going to go into. And that includes your taxes are number 1, your prepaids, so you paying your bills up front, and then your title company and your lender. So on this deal, buckets 1, 3, and 4, the true closing costs came to $14,414.70. Bucket number 2, the prepaids, came out to $6,544.78. Now the down payment plus all 4 of these buckets are going to come out to $126,959. So the rule of thumb is budget 2.5 to 3.5% closing costs on the purchase price, which is going to be on top of your down payment. So on a $530,000 home, the top of that range is about $18,500. And this deal ran $21,000. So today isn't just the buckets with receipts, it's finding out which bucket overflowed and why yours might too. So let's go from the smallest to the biggest surprise. Buckets 3 and 4 first, real quick. Then we're going to do the tax bucket that I promised you, and then the one that blew past my estimate. So section number 3, bucket 3, the lender fees and appraisal. So bucket number 3 is what it costs the lender to actually build your loan, plus proving the house is worth what you're paying. So the processing is going to be $1,495. The underwriting is $895, and the appraisal was $650. The credit report was $319. Why? Because credit reports for buying a home are different than your typical credit report. So if you're just going to, TransUnion credit report, you're going to get a different number than if you go to a lender. Your credit score is going to look a little bit different. So make sure you talk to a lender about your actual credit score if you're buying a home. This is why you can't rely on, TransUnion said I have a 750 credit score. Yay! It might not look exactly like that. So if you go check out the video that I will link below, it was a previous video that I did with a lender, Kenny Sylvester. And he goes through a lot of the things that can affect your credit score when you're trying to buy a home. Everything from medical bills to something that got sent to collections that you didn't even know was there. So all in, this landed right around $3,300. So my rule of thumb said this bucket runs around $2,000, and it came in a bit above, and that is normal for lender to lender variance. This is also the bucket where it's just going to pay to shop around. Below, there's a link to common questions that you can ask your lender, title company, and real estate agent to help make sure that you're getting set up with a good team that will help you get a good loan that will work for you in the long run for the house that you want to buy. All right, bucket number 4 is going to be your title fees. So the title company, this is the neutral third party making sure the seller is actually owning this house and nobody can knock on your door later on and be like, hey, this is great that you think you own this place, but you don't. So this will be the settlement fee, the title search, the title exam, the doc prep, and then 2 big ones are going to be the lender's title insurance, which in this case is about $1,437, and the owner's title insurance, which is about $1,988. So all in, this is around $4,700. Now, my rule of thumb was a low estimate that had it at $3,200, which is a typical rule of thumb on a $500K house. Now, this is a $550K house, so that is also part of what's happening here. Remember, you are usually allowed to choose your title company in Maryland, and you should. Their fee structures are typically going to differ. This is the second bucket that it's really worth shopping around. I highly recommend not just going for the cheapest number, but looking at reviews, looking at people who will refer them to you. Do you trust them and their judgment? So think about who you're using because it is extremely important on this very important investment. And the owner's title insurance is technically optional in Maryland, but you probably don't want to skip it. And we'll do a whole video about that because it's a whole thing. So it is a one-time fee and it protects you the entire time that you own the house. Okay, 2 buckets down. That's about $8,000. Now the bucket with the 2 lines I promised you from the start. So the transfer tax, city, county, $4,505. Transfer tax, state, $1,325. So it is $5,830 to transfer the ownership of this home. And these are 2 lines that lots of buyers haven't heard of, especially if they haven't bought recently or they are out of state buying for the first time in Maryland. So that is 40% of this deal's entire closing cost bill, just taxes. And the value bomb still applies. If you are a first-time Maryland home buyer, the state gives you a break on this portion. So in a deal like this, that is real money back in your pocket. If the taxes came in on my estimate, which bucket actually overflowed? The one nobody talks about, that is bucket number 2. Why my rule of thumb ran low. So my rule of thumb for the prepaid bucket was around $3,000 on a $500K home. This deal is $6,544.78. Let's see why. Because this is your money, you're just paying your bills early. So 12 months of homeowner's insurance up front is $2,100 and 6 months of property taxes is $2,772. 5 days of interest before your first payment is $375 plus the escrow cushion, which is 2 more months of taxes and insurance, which is about $1,277. So the swing is almost entirely the property taxes. Anne Arundel bills taxes semi-annually in July and December, so how many months you prepay actually depends on when you close. So close near a tax due date and the lender's going to collect a bigger chunk up front. Same house, same price, different closing cost month. This can be a thousands of dollars difference. So that is why the rule of thumb is just a starting point, and then getting a real estimate from a lender is going to be what you want, because that's a real picture of how it's going to work. So these buyers, this is just their first year of home ownership up front, but now you know which bucket to watch. One more line before we close the folder. Seller credits toward borrower fees, $0. So on this deal, the sellers contributed nothing towards the buyer's cost. That happens on competitive homes. But remember the ways that Maryland lets you shrink these buckets. negotiating seller help when the market allows, lender credits in exchange for a slightly higher interest rate, shopping your title company, and state or local buyer programs. That seller credit line can save $5,000 or $10,000. This is the part that your agent controls, the negotiation. Let's land this plane where we started. $106,000 down, 4 buckets. Your government split is $5,830. The buyer's half of the tax bill. Lender fees about $3,300. Title about $4,700. And prepaids are the overflow bucket, $6,500 because of when they closed. So real check, $126,959. Nothing on that page should be a mystery anymore. And that's the whole point. The buyers who are going to walk into a closing confident and understanding are the ones that saw all the buckets fill up in advance, that understood what they were going to pay. If you are saving to buy in Anne Arundel County, drop your target price point in the comments and I will reply with a ballpark. Grab the free PDF in the description, which questions you should be asking your lender, your title company, and your real estate agent, including the question of, can you walk me through the recordation and transfer tax at my price point? So thanks again to Brittany Bobbs at Cross Country Mortgage for the numbers. I'm Claire, the Maryland real estate lady, and I will see you in the next video.